Hello, everybody, and thank you for joining me today. It's Allan Barry Laboucan with the Rocks and Stocks News Show. It's around 8:30 Eastern Standard Time on Monday, July the 21st. And I did a really big show yesterday with 32 picks in it. And then there was some news out today on a few of those picks that I want to talk about in this show. There is some good trends that I want to add to, and then I'm going to open it with a company that I'm spot at the start of shows now. I'm spotlighting picks or a pick per show, and just going into a little details about why I like that company because I'm following lots of them and doing lots of shows these days. So I need to start talking more about the companies than I can in my big shows on the weekend. Let's get right into it. And the first company I'm going to talk about before I get into the trends, let me pull it up here. Just give me 2 seconds. Where are we? There we are. And now I need to get this one up. All right. So yesterday when I did this part about one of my top pick for what I call a gold explorer with an important discovery on Goliath Resources. I thought I had the image being shared and I got it all messed up. And I was talking about a map that I thought everybody could see. And so I didn't do quite the job that I wanted to. And so I want to do it again. Now, this is a map that shows you all of the drill hole traces and the locations. So the white dots are the locations where the drill hole is set up, and the black lines are the drill hole traces for the direction of the drill holes. All right. And the blue ones are the planned drill pads for 2025, along with the traces of the directions that they'll go in. And I really love this image because it tells you a lot about the what gets me really fired up about this project. Now, a lot of times when I talk about um, Goliath Resources, I mention the tremendous amount of visible gold in this system. And this map does a great job of showing that because the red lines, the red, are where there's visible gold in the drill cores. So as you can see, there's widespread distribution of the visible gold. Now they've got a lot of holes, almost, I think it's 98% of the holes. All of the holes have gold mineralization in them, which is incredible on its own. But then if you look at the red in these drill holes, this is the locations in the drill holes where they have visible gold, and that carries high grades. And it's quite incredible. You don't see this much distribution of high grade gold, visible gold in any system. So, for example, if you start over here, okay, and you go all the way to the other side of this is a mountain here. I'm going to start calling it the Sherbet Mountain or the Mountain of Gold, if you will. Even way over here, there's visible gold. So if you go from this side all the way over to here, you're looking at about 2,000 meters. Now, even if you only go from this side all the way to the top of the mountain, you're still looking at about 1,500 meters. All right. And then if you go from this side over to here, you're looking at about another 800 meters. So that's a very big zone with visible gold distributed all throughout it. Okay, widely distributed visible gold. Now, I'll point out a couple other things because I think that these are also important. Here is a structure that goes down to the bottom of the mountain. Here's another structure, here's another structure, and there's a whole bunch of vertical structures in here that are called reduced intrusion related gold bearing structures. Okay? Now, all of these represent our intersections, and they're if you modeled these, what you would see is a series of stacked veins, all right, that are gently dipping towards the west, southwest, if you will. And then in these vertical bodies here are a series of vertical dikes, reduced intrusion related dikes, all right? And when I initially started looking at this project, this structure and these structures really stood out to me because, in a gold system, you need cracks in the earth that are faults or structures, if you will, that are the conduits that the gold bearing fluids use as a path of least resistance to make their way, to make those fluids get up into the to the nearer surface. And in this case, they actually are in three separate, the gold is in three separate rock packages. One is the series of stacked veins that kind of start up here and come down through here, and there's, I think, 10 or 12 of those. And then these vertical dikes that also cut through those stacked veins. All right. And in some of those locations, they've done minimal studies on those locations, but some of those locations where they cross cut, you get two enrichments of gold into what the chap at the Colorado School of Mines that did these studies, Randall Karcher, is calling Goldilocks zones, where it's just right to have two enrichments in the same zone, one in the flat lying stacked veins and also in the vertical dikes. And over here, there's also gold in a third package of rock, which is an altered breccia unit. And so to get this much visible gold and so much gold mineralization, it's in almost every hole, by the way, in all of this map. You've got gold mineralization, and from from all the way up to high grade to even bonanza grades of gold in them. And then you've got this distribution of this visible gold all over the place as well. I would also point out that you can see a quite a cluster of visible gold really close to this one structure here. I find that very interesting because again, these cracks in the earth are conduits for the gold mineralization. So, what's going on now is they just recently started their 2025 drilling season, and that's where all these blue dots are the setups for the drill pads. And then they'll shoot a few holes off of each, some I think even more. I think some of these will have more than three off of each pad. So the total plan is to drill 60,000 meters this year with nine separate drill rigs. So that's ongoing. And also, what's ongoing is these reduced intrusion related dikes. They had drilled into them from 2021 to 2024. But because the research on these Eocene age dikes, sorry for getting too technical for you there. What that means is the age is about 52 million years. They were never thought of as prospective for gold until last year when uh, Goliath sent some of these in for assaying and they came back with high grade gold. And so that prompted the study by the Colorado School of Mines on these reduced intrusion related gold bearing dikes, okay, these vertical dikes. And that's where Randall Karcher and his team at the Colorado School of Mines identified the importance of these, not only these reduced intrusion related gold dikes, but also the cross cutting with the stacked veins, which is what he calls Goldilocks zones, where you get enrichment in two different temperature regimes in a one zone, and that's why he calls them the Goldilocks zones. Now, as they've been re-logging since about a month ago, all of the drill core from all of the past drilling, they found gold, high-grade gold, in the third rock package with visible gold as well, in these altered breccias, which is very exciting because, to get that much gold into three separate rock packages suggests that you've got a very powerful gold mineralizing system there that is long lived. So there's been a few events where the boiling or the fluids, the hot fluids, and the pressure caused gold mineralization to get into three separate rock packages. Now, what's also interesting about the relogging is the altered breccia is known to be just above the magmatic event that could be the cause of all the gold mineralization. Now, interesting, they have a geophysical anomaly sitting right below that third rock package, which is the altered breccia. So some of the drilling is going to get down deep into that as well. So they got a lot of great things going on, lots of great news, lot for the last few years, and they got a lot more coming up in the not like at any time, literally from here until probably the first quarter of 2026. So these are some of the reasons that are a lot of the reasons why Goliath Resources is my highest conviction uh, gold exploration pick for a company with an important discovery. And I think they're going to have a great year in 2025. And I think it could very well be their best year yet. All right. So let's get into some charts now. I just had to go off of screen share there for a minute. Now I'll get back on the screen share. And I talked a lot yesterday about why I thought gold was going to break out. Specifically, it was because this basing period here that reminded me of this basing period and this basing period here. And then gold had a good run after the basing period. And specifically, as the basing period was ending, the range got very tight and the volume dropped off. And then you saw a breakout. Same thing here. We saw a basing period. At the end of the basing period, it got into a very tight range on low volume and then a breakout. And here, it's been basing for the last 2.5 months or so, 2 months. And you notice that it was getting, and I noticed this and talked about it yesterday, it got into a very tight range at the what I think is the end of the base and was expecting a breakout. Well, I got pretty lucky because gold was up $50 today and broke out of and above that narrow basing range here, or that tight range here at the end of a basing period. So I think we're off to the races again, where we could see gold quite easily get up into new record highs. And I think that's immediately in front of us. All right. So then silver. Silver had a good day today as well, as is often the case. When gold goes up, so does silver. And as you can see, it had a very nice run here. And why I'm very bullish about this run here today is because we're about to break above $40. The recent I talked yesterday about the importance of silver breaking out above $35 an ounce, and it's been creating new higher lows and higher highs ever since. The last high was at $39.59 on the futures market. And today, right at the moment on the futures, it's trading at $39.21. So I think that this next breakout that is now starting will get us above that 39.59 and over $40 per ounce. So that's an important breakout as well. Copper, copper had a very good has had a very good 2 days in a row now, and I talked yesterday about this big breakout when Trump announced that he wants to do a 50% tariff on copper. I'm doubtful that it will actually happen, but what I do find very bullish is that it maintained or retained a lot of that breakout. So it broke out from $5, traded as high as $5.89. Again, this is on the futures, and it maintained, more than half of that breakout. Okay, which is very bullish. And the reason that I think that, even though I don't think that the tariff will go into effect, what I do believe that it did is it showed people how tight the market is on the supply of copper. So with this word that he was going to do it, it probably caused American end users to start buying more copper. And that buying is why I think that it has maintained a lot of this gain and emphasized how tight the supply chain is. Other evidence of how tight it is, you can look up smelters, the issue with copper smelters not being able to get enough supply for them to refine that copper. And again, we're getting lots of signs that the supply chain is very tight. And that's why it's trading now at all-time highs, well above $5. And this whole action here is record highs that have never been seen before in the price of copper. So that is very, very bullish. And I think that copper has a lot higher to go, not just because of the tightness of the supply, but also because of the demand that's growing, that's coming from, you need it for the infrastructure, the power grids in developed economies. You need it for in new emerging economies. You need it for technology, cloud computing, other technologies, the internet. You need it for cryptocurrencies. You need it for artificial intelligence. That's going to be a big one because that is like brand new. And you got to build you got to make the current power grids you be able to use to use that energy or get that energy to the data centers. You also got increased demand for electric vehicles. And robots are coming up. So all of these sources are going to cause a lot of demand for a new demand for copper that the supply chain is not prepared for. And so ultimately, I think you need much higher prices of copper to incentivize more exploration, more new mine development. And to incentivize that, I think you need a lot higher copper. When I say a lot higher copper, I mean $10 per pound and above and stay there. So this is a very good sign that we're on that bullish trend for copper. And that's why I'm so bullish on copper. All right, now let's get into a few companies that I had in my report yesterday. By the way, what I'll do is I'll put that report, a link to that report, because my weekend reports are getting very popular. They're getting very high viewers, and also they're watching those videos for very long periods of time. Uh, and the weekend reports, that's going to be a staple from now on. And then when I got something to talk about in these reports, like these are a little too difficult to do in a written report. And so I'm probably going to be doing less written reports and more video reports. But again, the weekend report that just came out, I'll put a link to that where I talked about my entire list or almost all of my current list of companies that are my picks. And a couple of those had news out today that I want to talk about. So let me pull that up. The first one is Blackrock Silver. And what Blackrock Silver talked about, the headline is Blackrock Silver commences Eastern Expansion drill program targeting 1.2 kilometer trend at Tonopah West. That's the name of their project, Tonopah West. Scout drilling discovered the extension of the high-grade Merton vein created an opportunity to expand the DPB resource up to 1,200 meters to the east. Um, they talked about assay results from reverse circulation at their scout drilling program. These intercepts cover a new zone of silver and gold interpreted to be the outer ring structure of the fraction caldera and are not included in the 2024 resource. So they already have a resource of about 100 million ounces of silver that's very high grade. In an undeveloped, as far as undeveloped silver mines, this has the highest grade in a resource. So it's a very good project. And it's at that sort of threshold where you get above 100 million ounces that they get very exciting projects. Okay. They talked about a fully funded 15 drill hole program totaling up to 5,000 meters is underway. Now, that's as of now. Results from this program will be incorporated into an updated mineral resource estimate in Q1 2026. Now they talk about two updated resources. So that they're talking about the entire project. All right. So they go into the details, the overview of what they're talking about. They're going to use a reverse circulation drilling to create the pre-collars, and then they'll bring in the core rigs to then do the rest of the holes. And that's going to be 15 drill holes targeting this eastern expansion zone between the DPB resource area and the eastern extent of the project. Drilling is anticipated to be completed in October without assay results expected through year end. Andrew Pollard, who's the CEO, stated, and I quote, with drills now turning on this fully financed program, we're stepping out across a 1.2-kilometer corridor with strong potential to significantly expand our mineral inventory at the Tonopah West. Scout drilling confirmed the eastern extension of the high-grade Merton vein well beyond the current resource boundary, returning standout grades including 2,063 grams per ton silver equivalent, over 1.52 meters, and 952 grams per ton of silver equivalent over 4.57 meters. This newly defined zone, situated along the outer ring structure of the fraction caldera, lies entirely outside our 2024 resource and presents an opportunity to quickly and meaningfully grow the scale of the project. Results from this program are expected to underpin a resource update in Q1 2026. The company remains on track to deliver a separate resource update in Q3 2025 that will incorporate all results from recently completed M&I conversion program, end quote. So the drilling that they've done up to now, they've called their resource expansion and their M&I conversion program. So that's going to go into a Q3 2025 updated resource. And then they're doing a more expansion that they'll have a completed one, a complete one for the entire project in Q1 2026. So here you can see the grades. Okay, so I love this. This is a great map because as you can see in red here are the resources that they've already done. It's in a series of epithermal veins, and a couple of things that are quite interesting. You see this bend here? This is really important. That's where a good chunk of their resource is. And then you see more of it along this feature here, structure. Now, what they're talking about is expanding down in here. And look at that. There's another nice bend there. Expanding in between this smaller resource up here and this big one down here. Also in between these two, and then up in here, and then it remains open. The structures keep going, and they haven't even got to that yet. So there's a lot of room to grow the resource that they're talking about. And here is some of the reported holes. Here is a cross section where you can see how the veins are acting in relation to some structures as well. And I think they might have even had some drill core. No, they don't. Okay, so let's go back to this map. So lots of room to increase the resource, as I said, in these purplish areas and beyond, way up in here. And yeah, this is looking really good. I love to see those high grades that they're talking about. And so I think their 100 million ounce resource is going to get a lot bigger. And that's the news from Blackrock Silver today. The next one is a brand new pick that I included in my report yesterday, which is a company called Argenta Silver. They had the news out this morning, and they drilled 533 grams per ton of silver over 20.20 meters. In an epithermal vein, that is a very thick intersection of high grade. Included inside of that 20 meters was 3,549 grams per ton of silver over 1 meter from its inaugural, that's easy for me to say, drill program at El Kivar. Okay, so they talk about being pleased to report first batch of assays from the ongoing 2025 winter diamond drilling program at their 100% owned project in the Salta province of Argentina. That's one of the very well-known mining regions of Argentina. The drill holes completed by the company on the El Kivar project have delivered wide, high-grade silver intersections and results from additional sampling of historic drill core confirms upside for the resource expansion. So they just got, this is a newly trading company. They got this project as their listing project. It has a 50 million ounce resource on it, and I'm later on they'll talk more about why they're relogging and assaying some of the core and also surface rock sampling from unexplored areas on the property have returned multiple high-grade silver results, highlighting the growth potential of the new mineralized zones. So here's the highlight drill holes. There's that 533 grammer over 20 meters. Had a outstanding, very high grade, 3,500 grams per ton of silver over a meter, plus 484 grams over 5 meters, 805 grams over 3 meters. I'm in Mexico, and there's a lot of epithermal veins mines here in Mexico for high grade silver, and they generally are only a meter to 4 or 5 meters. So when you're talking about veins with high grade from 3 meters up to 20 meters, that's a big blowout. And these are what are called dilation zones, where the rocks allow the vein to get even bigger, and that's a really nice one. This one here validates continuity with 300 grams of silver over 26 meters. Included in that was 713 grams over 8.25 meters. Also included in that was 1,169 grams over 2.5 meters, and even right shallow at the top of that hole, 1 meter of 1.22 grams. So these are very high grades that they're talking about. This would be a beautiful grades for a mine. A lot of mines of silver in epithermal veins, they're around 300 grams per ton. So this is very high grade material. They did a step out hole that had 112 grams of silver over 19 meters, but included inside of that was 408 grams of silver over 2.2 meters, 105 grammer of silver over 7 meters, which extended the high grade zone 50 meters to the southeast. So that's just like sort of, oh, we'll test over here and see if we can extend it. Now they'll have to do more infill drilling to up and above and below it. Not really infill, but up above and below it, the vein to see what else that has in it. They did historic core sampling. So they took unassayed historic drill core and assayed it, and that returned up to 602 grams per ton of silver over 3 meters. So this is free work they get from somebody else's, the past operators' work over 3 meters. Included in that was 882 grams of silver over a meter. 35% of historical drilling has been cut and assayed, leaving some 66,000 meters of core unanalyzed and available at a low cost for potential resource expansion. It's curious. They must have drilled this a long time ago and just thought that this was not good enough grade or some reason. I'm going to try and get them on an interview. I've sent out an email to their CEO and their investor relations person. So if I get them on, I'll try to ask them that question. Surface sampling exceeds analytical upper detection limit of 20,000 grams per ton of silver for a single rock sample, with additional surface rock samples of 16,000 grams per ton of silver, 6,000 grams across the new Kivar South targets. Joaquin Marias, who's the CEO, president, and director of Argenta Silver, commented, and I quote, "The wait is over. While silver spot prices are on the verge of new record highs, our first batch of results is here, a true statement of El Kivar's potential to deliver unparalleled results. Since the company's inception, our approach has been laser focused on creating sustainable value for our stakeholders, with assays returning 533 grams of silver over 20.20 meters in a drill intercept, a surface rock chip sample topping 20,000 grams per ton of silver, and legacy core that has been sampled for the first time, returning positive high-grade silver results. We've only just begun to unlock the true potential of this high-grade silver system. Expect more results from the ongoing exploration program." Not a single thing in that quote was overly promotional. It's all very accurate. And so this is a serious project, my friends. If you're into silver exploration, this is one you definitely want to take a look at. Um, they talk about the 2025 winter drilling program that kicked off in May as part of a 4,000 meter winter campaign. It's winter time down in Argentina, but no problem drilling to confirm known high-grade zones, step out along strike, and test new targets. Assays from the first three drill holes have been received, with results for the remaining holes expected by mid-August and mid-September. Of the three holes with assays in hand, one step-out hole extended the known mineralized footprint by 50 meters to the southeast, previously untested, supports follow-up drilling in the upcoming program, encourages the company to test extensions of the current deposit for further step-outs. Two confirmation holes intersected multiple broad high-grade silver intervals within the, I'm going to brutalize this name, Yaxchi deposit, providing fresh material to document alteration lithology and consistent high-grade silver character of the mineralization. Now, I will also add in here that epithermal veins are found in clusters, and it certainly shows signs of clusters. and lots of alteration on their project. Um, this map shows where they collared the drill holes. Then they do the highlights again. Here, oh, this is a great map here. So here is all the in purple is all of the intersections that are 500 or higher grams per ton of silver. That's not silver equivalent, that's just silver. The reds are 100 to 500. So as you can see, look at how this beautiful zone is it's actually here you see that that's what's in their resource, I believe. But then look at how it blows out as it gets deeper. And then you've got very minimal drilling. And so it's wide open to keep testing in this direction. And then they've got reasons to believe that it could also, so it could be kind of like a dome, if you will, of high grade silver. That's looking really good, my friends. Here's a table with the results. Here's that surface sample with native silver is visible as pale metallic gray sparkles. So where you see the silver visible pale metallic gray, that's your silver. Here's a surface rock sample reached analytical upper detection limit of 20,000 grams per ton of silver. Now, you always have to be careful with those grades in a surface sample because, it's not in a drill hole. That gives you the length and the actual grade and over an intersection, but that tells you for sure that there's more drilling to be done here. Let me see if there's anything else I wanted to talk about from there. No, there's not. So that's the Argenta news. Am I ever glad that I included them for the first time in my report yesterday? Today they delivered great results, and I think this company is going to keep having great results because it looks like it's wide open to keep getting bigger and more infill drilling, and that will help them to increase their resource. So you notice that this was on the bottom of a shell of high grade from past drilling. So that expands this high grade down into here. This was a confirmation hole. This is a brand new hole. And so I think that's why they're optimistic that over here they could keep extending that zone. I love high grade silver. I love it in an epithermal vein because here in Mexico, 10% of the silver ever produced worldwide has come from Mexico. And almost all of that has come from epithermal veins. All right. So these guys in Argentina is similar geological stories, similar kind of deposits, not as well developed with mining of silver as Mexico, but this is a great project that looks like it's only going to get greater. So yeah, check out Argenta Silver. Their symbol is AGAG on the Toronto Stock Exchange Venture Market. And as I said, I've reached out to the company to try to get them on an interview. And so that's the next time I hope to be talking to them on an interview really soon. All right. The next company is Newfound Gold. Uh, and I've covered Newfound Gold in the reports in the past. I didn't have them in yesterday's report, but I probably will in a future report, but I have covered them in the past. And well, the reason that I've covered them in the past is because I actually wrote a special report on why I thought that this part of Newfoundland could be the Abitibi 2.0. If you do a search on my Substack at rocksandstocks.substack.com. I think it was in 2024. You'll find that, and I think they just do a search for Abitibi 2.0 Newfoundland, and I think you'll find it. If you don't, just send me an email at rocksandstocks.substack, or sorry, rocksandstocksnews@gmail.com, and I'll find that report for you if you can't find it. But here, Newfound Gold had really good news out today. So what they said is Newfound Gold announces preliminary economic assessment for their Queensway gold project. I think it's fair to call that the Queensway high grade gold project because it has some spectacular high grade. So here's the highlights. Solid low cost production profile from year one via a phased mine plan. In phase one, low initial capital costs of 155 million builds average annual gold production of 69.3 thousand ounces of gold at an all-in sustaining cost of $1,282 per ounce of gold in years 1 to 4, planned to fund phase two. Right now, folks, why this isn't so important is the average cost of mining gold amongst the significant gold miners is probably around $1,650, maybe even up to $1,700 per ounce. Here you're looking at a project that is several $100s less in all. That's not cash costs. That's all in sustaining cost of $1,282. Gold is currently trading at $2,000 above that, and I think it's going even higher. So, and really soon, and keep making record highs. So that's a great number right there. So then that phase two will be cost growth capital. So to build that out would cost 442 million. And that builds an average annual gold production of 172,000 ounces of gold at an all-in sustaining cost of $1,090 per ounce of gold in years 5 to 9, paid back in less than 1 year. Wow, that's awesome. Early revenue potential, initial gold production targeted for 2027, pending regulatory approval. And by the way, folks, the stated goal of the Newfoundland government is that they want to see 5 gold mines in production before 2030. So they are very pro mining in Newfoundland. And I don't think that that is optimistic at all to see the regulatory approval to help them get into production by 2027. Significant leverage to the gold price. After tax net present value increases to 1.45 billion from 743 million, and IRR increases to 197% from 56.3% when gold price raised to US $3,300, that's the current price, from the base case of $2,500 per ounce of gold. So using $2,500 an ounce of gold in this PEA gets a 56.3% IRR and a $743 million net present value. If you use US $3,300 per ounce of gold, it then jumps the IRR up to 197%. That's just unheard of these days, folks. IRR. And then the net present value is at 1.45 billion. So if you use current prices, you get a net present value of 1.45 billion, which is they're trading at about their valuation is about 30% of that NPV. All right. I know that Eric Sprott is a huge shareholder of this company, and when he looks at that, he will be excited. Total production of 1.5 million ounces over a 15-year life of mine at an average total cash cost of US 1,085 dollars per ounce of gold, and the all-in sustaining cost of 1,256 uh, ounces dollars per ounce of gold, plus exploration upside. Significant resource expansion potential both near the MRE and camp scale over 110-kilometer strike extent. So when they talk about that strike extent, this is an orogenic gold system. And in orogenic gold systems, they have very deep roots. Okay. They can go down for thousands of meters. And how that gold bearing fluids make their way up is these deep crustal cracks that go down very deep into through the crust. And that's the conduit. That and secondary structures are the conduit that brings the gold up into near the surface. So then they talk about pleased to announce a PEA for development of the AFZ core on the company's 100% owned Queensway project located near the town of Gander, Newfoundland in Labrador, Canada. I think it's only like 20 miles or something like that to the town of Gander. They're holding a webcast tomorrow at 10 a.m. Eastern Time, July the 22nd. So I'm going to try and tune into that if my schedule permits. So if you're interested in newfound gold, check out that webinar tomorrow at, as they say, 10 a.m. Eastern Time. Keith Boyle, who's the new chief executive officer, commented, and I quote, they recently changed the board, brought in a mind building team. And he stated, and I quote, we are pleased to deliver the first economic study for Queensway, just months after announcing an initial mineral resource estimate for the project. The PEA reinforces our conviction that Queensway can become a low-cost, high-margin, cash flow generating mine. This is a significant step in achieving our goal of building and operating a gold mine in central Newfoundland. Since day one, the objective of the new management team at Newfound Gold has been to advance Queensway to cash flow. The PEA outlines a phased approach with an initial small high-grade open pit mine with toll milling, followed by the construction of a larger on-site operation, which will include both open pit and underground mining. A phased project design provides for early gold revenue generation, processing of the highest grade mineralized material at the start of the operation, and in-pit tailings deposition. This unique combination of design elements allows for low initial capital investment, a rapid payback of the initial investment, using cash flow to grow the operation, thereby providing for a superior rate of return and minimizing dilution to shareholders. The infill definition and exploration drilling, completion of the environmental baseline work, trade-off and further engineering studies will allow for rapid advancement of the project, phased project, end quote. They talk about the PEA being preliminary in nature, includes inferred resources that consider, this is standard disclaimer. There's the details. You can look at that later. But I want to go to their stock chart, and they talk about lots of great details in there. I'm sure they're going to talk about all of this in their webinar tomorrow. I'm going to try and attend it and take some notes. But I want to go to their stock chart and talk about. Let me go back to their quote. At the beginning of the quote, Keith Boyle. He talks about being pleased to deliver the first economic study just months after announcing an initial mineral resource estimate for the project. Okay, now, folks, not all resource estimates are created equal. And what I mean by that is when you are doing a initial mineral resource estimate, and you quickly want to do a preliminary economic assessment off of that, you have to do it, the mineral resource, in a pretty conservative fashion so that it is can then have a preliminary economic assessment done on it. So now let me pull up their stock, and I want to show you something here. Newfound gold. Where is it? Newfound gold. Oh my gosh, where are you? Newfound gold. Let me go back to the news release. And I can't remember all the symbols of the companies that I follow. I should be able to remember that. I have a pretty good memory for this sort of stuff, but this one escapes me. Here, NFG. That's where I screwed up. So I'll put in NFG, and that's their symbol on the Toronto Stock Exchange Venture Market. Now, you see this drop here? This happened when they put out the initial mineral resource because, as I said, when you're going to do a preliminary economic assessment on it, shortly after you do a resource estimate, you have to be pretty constrained and pretty conservative in that resource because you then need to put wrap economic numbers around it. And so the market was disappointed by this resource, but you have to understand the strategy of quickly doing a preliminary economic assessment. So that's why they did this. They didn't want a lot of arm waving or everything to be inferred and not able to have a preliminary economic assessment. I have seen all in my career a lot of initial mineral resource estimates that collect dust for years before they wrap economics around them because they're what I call an arm waving mineral resource estimate. In this case, you can't do a lot of arm waving if you're going to quickly do a preliminary economic assessment. So since they did that, you'll notice that the stock started to recover quite nicely. It created a series of higher lows and a series of higher highs. So this is a nice trend, and you'll see that the 50-day moving average has has turned around since here and is now on a good trajectory upwards. I don't think it's very long before that 50-day moving average will break through the 200-day moving average in what's called a golden cross, which is one of the technical indicators that I pay a lot of attention to. But they were up 6 cents today to $2.24. And I think that as this preliminary economic assessment, which went out after the market closed, by the way, folks, I think that as this gets out there and gets better known, it wouldn't surprise me if there's a significant uptick in the market tomorrow for Newfound gold based on this very good preliminary economic assessment. All right. So there you go, folks. That's my show for today. Good news on some companies, some good trends. The show is I started the show out with one of my highest conviction gold exploration companies. And as always, my shows are for information purposes only. It's important for you to do your homework before making any investment decisions. I am a shareholder of Goliath, which I talked about at the start of the show. So I'm not of the other companies, but keep that bias aware of that bias when I talk about Goliath. But also keep in mind that whenever I talk about a company or a trend, I'm biased by the fact that I'm biased like anybody else that has an opinion on any subject. They want to be right. And that's my big bias, whether a company is a pick, a sponsor of my reports, a company that as a feature, the trends that I talk about. So do your own homework. These are my opinions. I'm only trying to give you my opinions that are based on 30 some years of being in the exploration business and having had wonderful mentors in geology, geochemistry, geophysics. That's really what the filter that I put every company through. And I've also been a market commentator since 2005. So I've been looking at trends for a long time and I tend to get them right a lot. If you don't believe me, just go to my Substack and at rocksandstocks.substack.com and look at my past reports. You'll see how right I get it and how often I get it right. On that note, have a great day and we'll talk to you soon.